Drew Boyd, Inside the Box, a proven system of creativity for breakthrough results. Embark on a journey to explore the world of global macro investing with Inside the Box, a proven system of creativity for breakthrough results by Drew Boyd. This book summary delves into the strategies, risks, and rewards of global macro investors, offering valuable insights from accomplished hedge fund managers such as George Soros, Julian Robertson, and Jim Leitner. Understand the evolution of global macro investing, dating back to John Maynard Keynes' pioneering days, and learn the techniques and principles that help these masters predict market movements and reap huge profits. Get ready to uncover the secrets behind their success and discover how to incorporate these strategies into your own investment journey.
Investing in global macro. Global macro investors aim to generate high returns by leveraging bets on equity, currency, interest rates, and commodity markets based on macroeconomic conditions worldwide. Unlike traditional investments, these trades can be directional or relative, depending on the manager's prediction on the price or spread movements. The goal of all global macro hedge fund managers is to produce superior risk-adjusted absolute returns. Despite the high reputation for risk-taking speculators in this field, global macro hedge funds have reported good average annual returns with much less volatility than the S&P 500 index. For investors seeking strong returns, examining the practices used by experts can help in utilizing this new investment strategy. Mastering global macro investing. Mastering global macro investing requires more than just a good run. Economist John Maynard Keynes and pioneer Alfred Winslow Jones successfully invested according to macroeconomic conditions. Today, global macro investors such as George Soros and Julian Robertson have cornered headlines with their fabulous successes and huge losses in past macro events. However, global macro investors were not responsible for these events but exploited the underlying conditions. The global macro strategy did not disappear after the dot-com bust of 2000, but rather evolved. Mastering global macro investing requires reducing mistakes, respecting the market, and maintaining a sharply defined point of view. Jim Leitner's Global Macro Investing. Jim Leitner, an experienced trader, explains that global macro investing involves considering opportunities from micro to country-specific situations across every asset category and every country in the world. To get started with it, you must develop enough knowledge to build a trading strategy and read widely about global and international news. Leitner advises against getting emotional about trades and looking at them all as probabilities. The Humble Trader. Christian Shivajothi stumbled upon a trading career as a student and went on to become a successful investment company owner. He emphasizes the importance of integrity and experience in potential hires. Shivajothi learned from Goldman Sachs' failed experiment of hiring talented 20-year-olds as traders. Only 5% made it through the initial training period. He advises new traders to remain humble, calm under pressure, protect their integrity, and have both luck and talent. Market position as a critical factor. In The Hedge Fund Edge, Dr. Andres Drobny emphasizes the importance of market position in making investment decisions. According to Drobny, market position provides an essential context for understanding investment opportunities. While it's crucial to analyze past trends, focusing too much on the future can create unnecessary noise. In today's market, everyone is searching for bubbles to exploit, so it's essential to be wary of overconfidence and only trade when presented with a good risk-reward ratio. Drobny stresses the need to understand the underlying process of a viable trade and to make decisions based on clear and reliable information. Interest rate risk, mitigate or profit. Dr. John Porter of Barclays Capital suggests two ways to handle interest rate risk: to mitigate or to take it from those who want to minimize it for profits. Porter himself follows the latter approach and invests in different instruments with such risks. He explains that these markets are zero-sum games, where one side's gain comes at the cost of the other. Porter warns that even the smartest people can fail in this game, as long-term capital management did. A case exemplified in Roger Lowenstein's book, When Genius Failed. This summary offers insight into how to manage interest rate risks successfully. Luck versus diligence in trading. Dr. Sushil Wadhwani, an experienced trader, believes that luck plays a bigger role than hard work in trading. He suggests that central banks should prevent bubbles instead of managing their aftermaths, as Alan Greenspan did. Wadhwani also warns that the U.S. fiscal situation is dire, and pessimistic forecasts may come true. With his background in academia and central banking, Wadhwani offers valuable insights into trading and market dynamics. Peter Theil, From PayPal to Macro Investing. Peter Thiel, the former CEO and founder of PayPal, entered the world of macro investing in 1996, where he combined his skills in math, economics, and history. As a macro fund manager, Thiel believes in viewing the world broadly and seeking opportunities beyond conventional boundaries. To excel in this field, one must develop a liking for quantitative models and possess a diverse set of skills. Thiel's success in the finance industry demonstrates the effectiveness of applying a multidisciplinary approach to investing. The Unconventional Trader. Uriah Harris, a veteran trader since 1977, shares his unconventional journey to success in the trading world. Despite being a classical education graduate with no MBA, he found his way in the market by working as a currency arbitrager for a friend of his father's. While he trades his money currently and is still unsure of his talent at times, Uriah Harris has established himself as a successful trader. Investing advice from Jim Rogers. Jim Rogers, co-founder of the Quantum Fund with George Soros, shares his investment philosophy in his books, Adventure Capitalist and Investment Biker. According to Rogers, terms like global macro and small cap are marketing ploys. He warns against investing in the dollar and advises putting money in non-US dollar assets and commodities. Although he always bets against bubbles, he admits it's challenging to get the timing right for market shakeouts, which he predicts will occur within 10 years. Rogers' investment experience speaks for itself, having returned 4,200% to quantum fund investors in 10 years. The fundamentals of investing. Dwight Anderson, formerly of Robertson's Tiger Management, now focuses on investing in commodities and basic industries with his hedge fund, Osprey Management. Anderson's success lies in his ability to scrutinize markets, focusing on fundamentals when making investments. He believes in analyzing every detail and hires talent based on their intelligence, work ethic, pride, ability, and passion. Equities investor Scott Bessent. Equities trader Scott Bessent learned from Jim Rogers and George Soros, reading voraciously and gathering information before making investment decisions. Bessent recognizes the risks of both long and short positions, but he quotes Soros, "If you are right in a position, you can never be big enough." Bessent left Soros Fund Management when Soros decided to change his level of risk, leading many senior staff members to pursue more active careers than they would have had under his new regimen. From few hundred to $1.5 billion. Marko Dimitrijevic, the head of Everest Capital, started his journey in real estate with just a few $100s in a real estate investment trust, REIT. The investment returned 10% in 3 months, and he became hooked. Today, Dimitrijevic's fund manages over $1.5 billion and has expanded into other investment products. He advises investors to use historical information judiciously because tomorrow can be very different from yesterday. He believes that the growth in developing countries is very stimulating and questions whether the euro is a true alternative to the dollar or if its 30% growth over the dollar in 3 years has simply generated enthusiasm. The quiet and successful London investment managers. David Gorton and Rob Standing, the managers of London Diversified Fund Management, use a relative value investment approach mixed with global macro investments to earn successful returns. Their approach may seem similar to long-term capital management, but they maintain a low public profile. Although their methods are based on complex mathematical models, they describe them as bloody arcane rubbish. Despite this, they have found great success.
In conclusion, Inside the Box demystifies the world of global macro investing, revealing the strategies and techniques used by renowned investors to achieve superior risk-adjusted absolute returns. From leveraging macroeconomic principles to the importance of humility and integrity, the book summary unpacks the journey of these experts through major market events while highlighting their unique investment ideologies. As global macro investing continues to evolve, adapt, and diversify over time, this book arms you with the knowledge and understanding necessary to tap into its potential and enhance your own investment portfolio, be it a seasoned investor seeking an edge or a curious newcomer aiming to learn from the best. This book delivers a treasure trove of insights that will leave a lasting impact.